Have you ever been blindsided by a sudden, unexpected expense, like an unexpected medical bill or a car repair that can't be postponed? In 2026, handling these financial curveballs isn't just about cutting back on luxuries or going into debt. With the rise of AI-driven financial tools and advanced liquidity options, there are smarter ways to navigate these situations while keeping your long-term goals intact. In this video, we'll explore the top 5 strategies to manage unexpected expenses without derailing your financial future. By leveraging technology and modern financial tools, you can turn surprises into manageable opportunities. 1. Trigger an AI-powered bill negotiation. One of the most frustrating parts of unexpected expenses is dealing with inflated or incorrect charges. These surprise bills, whether it's a sudden medical expense, a sky-high utility bill, or an incorrect service charge, can easily derail your financial stability if not addressed promptly. In 2026, managing these kinds of surprises doesn't have to involve endless hours on the phone with customer service representatives or getting lost in a maze of paperwork. Instead, you can leverage modern technology, particularly AI-powered negotiation tools, to handle these situations quickly and efficiently. The process is incredibly straightforward. Simply upload the invoice to a specialized AI service designed to negotiate bills on your behalf. These AI bots work like a digital advocate, equipped with advanced technology to cross-reference your bills with the latest regional pricing data, insurance codes, and market rates. By analyzing the details of your bill against the standard cost of services in your area, these AI-powered services can spot discrepancies, missed charges, or inflated prices that would normally go unnoticed. The real payoff of the strategy is significant. These AI bots can often reduce the balance by 20 to 30% before you even touch your savings or consider other options. Imagine saving hundreds of dollars on a surprise medical or utility bill with minimal effort. Not only do these bots look for small errors, but they also negotiate for fair market rates, leveraging technology to ensure that you're paying a price that aligns with market standards, not one that's inflated or overcharged. This method not only saves you money, but also reduces the mental load associated with dealing with financial surprises. Instead of feeling overwhelmed by a sudden bill, you can rely on technology to quickly adjust the cost, giving you more time to focus on your priorities without the added stress of managing complicated negotiations. In a fast-paced, busy world, having the option to let AI handle such tasks can drastically reduce the cognitive load of financial management, leaving you feeling more in control of your finances. 2. Access accrued wage liquidity. In the past, many people would turn to high-interest credit cards or personal loans to cover unexpected expenses between paychecks. While these options may offer quick access to funds, they often come with hefty interest charges and fees that can quickly spiral out of control, leaving individuals with even more financial stress. But with the rise of earned wage access (EWA) platforms in 2026, there's now a more efficient and less stressful way to access liquidity when you need it most. EWA platforms work by allowing you to access the wages you've already earned but haven't yet been paid. Essentially, these platforms give you the ability to withdraw money from your paycheck before payday. This means that if a sudden expense like a car repair hits on a Tuesday, you don't have to wait until the end of the week for your paycheck. Instead, you can simply use an EWA app to withdraw the money you've already earned for that week, providing you with instant, interest-free liquidity. The beauty of EWA lies in its simplicity and its ability to help you avoid the pitfalls of high-interest loans and credit cards. Traditional credit options often place individuals in a cycle of debt, where they end up paying back much more than what they originally borrowed due to accumulating interest and fees. EWA, on the other hand, allows you to tap into funds you've already earned, giving you the flexibility to manage unexpected costs without falling into debt or worrying about mounting interest charges. By using EWA platforms, you can better manage your emergency expenses without derailing your budget or putting your financial health at risk. This system removes the stress of waiting for your next paycheck, while also helping you avoid the financial burden that often comes with high-interest borrowing. As a result, EWA platforms offer an efficient, flexible, and debt-free way to handle financial surprises, giving you more control over your money and peace of mind when life throws an unexpected expense your way. 3. Utilize asset-backed microloans. If you have investments or a brokerage account, There's another smart way to handle unexpected expenses without selling off your assets or triggering a tax event. Many trading platforms now offer portfolio line of credit, PLOC, services, which allow you to take out small loans against your invested assets, rather than selling shares of your stock or mutual funds, which may be taxable. You can leverage the value of those assets for liquidity. These loans typically come with lower interest rates compared to credit cards or personal loans, making them a more affordable option in times of financial need. The key here is that you're not disrupting your investment strategy by selling off assets, which could harm your long-term financial goals. Instead, you're borrowing against those assets while they remain invested and continue to grow. By doing this, you preserve your wealth-building potential while accessing funds when you need them most. With PLOCs, you can often get approval instantly through your trading app, providing quick access to funds without the delay associated with traditional loan applications. It is a powerful way to tap into your assets and secure low-cost liquidity when you face an unexpected expense. In 2026, with more trading platforms offering PLOCs, it's become a valuable tool for many investors seeking to balance short-term needs with long-term wealth growth. 4. Deploy parametric insurance claims. In 2026, traditional insurance claims can be a hassle, with long processing times and a great deal of back and forth with insurance companies. But with parametric insurance policies, things work much faster. Parametric insurance is a relatively new innovation where claims are automatically triggered based on specific data points, such as the occurrence of a localized flood or a major weather-related event. For example, if your home suffers damage due to a flood, a parametric insurance policy might automatically pay out based on data from weather stations or flood sensors in your area, without the need for an adjuster to assess the damage. The real payoff of parametric insurance is speed. With this technology, you can receive the payout directly into your account within hours of the event, helping you recover financially much faster. The ease of use and quick turnaround time make parametric insurance an excellent solution for managing unexpected events that could otherwise leave you financially vulnerable. This proactive approach to insurance means you're not stuck waiting for weeks or months to get the funds you need to handle the crisis at hand. 5. Execute a subscription freeze protocol. When an unexpected expense hits, the last thing you want is to dip into your emergency fund or take on more debt. Instead, you can implement a subscription freeze to give your budget some breathing room. In 2026, many of us are subscribed to various digital services, from streaming platforms to food delivery memberships. While these subscriptions may seem small, they can add up quickly and put a strain on your finances when you're facing a financial curveball. The move here is to activate a central dashboard to pause, rather than cancel, all non-essential subscriptions, such as streaming services, AI tool credits, and delivery memberships, temporarily. By freezing these services for 60 days, you can create an instant cash flow surplus of $100 to $400 per month. This gives you the financial flexibility to pay off unexpected bills or cover emergency expenses without having to touch your core emergency fund. The best part is that you're not giving up any services permanently. You're just hitting pause for a brief period, allowing you to recover from the immediate expense and avoid unnecessary financial strain. There you have it. The top 5 smart ways to handle unexpected expenses in 2026. From using AI-powered bill negotiation bots to accessing earned wages instantly, these modern tools and strategies allow you to manage sudden expenses without derailing your long-term financial health. By adopting these approaches, you'll feel more in control and less stress when life throws you a financial curveball. If you found this video helpful, make sure to like, share, and subscribe for more tips on managing your finances. Let me know in the comments if you've tried any of these strategies and how they work for you, and I'll see you in the next video.